Namaste. Good morning. Let's start with question number 10. Let's start with question number 10, page number 13. Farah, aged 40 years, is an advocate. She keeps her books of account on accrual basis. Her P&L is as follows. On the credit side, taxation fees earned, appeal fees earned, consultancy, dividend from Indian companies, interest on deposit certificate issued under gold demonetization scheme, honorarium received for valuation of papers, rent received in respect of a property, staff salary, rent, admin expenses, incentive to office staff, meeting, seminar and conference expenses, purchase of car on 1st July for official purposes, repairs and maintenance of car, traveling expenses, empty in respect of house property, net profit. Admin expenses include 50,000 paid to a tax consultant in cash. The traveling expenses include expenditure incurred on foreign professional tour of 50,000, which was within RBI norms. Farah paid medical insurance for her parents, senior citizens, 47,000. She also paid 8,500 for preventive health checkup for herself and her spouse. Repairs and maintenance of car is for the period 110 to 3924. She paid 1 lakh towards advance tax during the previous year. Compute her total income and net tax payable as per the most beneficial taxation scheme for her. Read through. May I? We will first compute the professional income. I'll go by the income minus expenditure method. I'll go by the income minus expenditure method. Normally for professions, they do like income minus allowable expenditure. Instead of net profit, and we'll get the same answer. You need not worry. But this is more friendly method for professionals. So she cannot opt for that 44 ADA. She cannot opt for even the other way around. She cannot opt for. Repairs and maintenance administrative include, sorry, administrative include expenses include 50,000 paid to a tax consultant. 6 lakhs plus 50,000 into 70% is only allowed. Oh, it's cash out. Okay. Raja, which one? Yeah, I thought it's tedious. So I took 70%. No, no, no. I haven't done that. I thought it is a tedious adjustment. Then I understood it's a cash adjustment. It is not mentioned it is cash. Then you assume that everything is in order. Why do you assume that TDS has not been deducted? I did not. I thought I made a mistake that I thought it is a tax adjustment, but then only I understood it's 40A3 adjustment. I thought 40A adjustment. Okay, I thought it is a 40A an adjustment and said 6 lakhs plus 50,000 into 70%. No, no, no. Then I understood. No, no, it's only 6 lakhs. Okay. Because it started with the word tax, I thought it is a tax adjustment. Then I understood it is a 48. Repairs and maintenance. For the financial year 23-24, according to section 37, only expenses of that year can be claimed. So you have paid up to 39.24. That is, you have paid for 1 year. Okay, 35,000. I will write an assumption now. Okay. Where assessee follows cash basis of accounting, then this can be fully claimed. Normally, professionals follow cash basis. In this question, it is specifically mentioned as accrual. Hence, 50% is disallowed. If it is cash basis of accounting, whatever received, whatever paid. Normally, all professionals, lawyers, doctors, chart accountants always follow cash basis of account. Traveling expenses fully allowed, as the foreign travel is also for the purpose of profession and it is within RBI norms. Depreciation for car, 3 lakhs into 15%. If they are following accrual basis of accounting, advance will not be, but income earned but not received, okay, will be taken as income only. Normally, professionals don't follow because after service, there is always a risk. Our institute itself says follow only cash basis of accounting. As a guidance note, they have given. Rent received 90,000 less MT paid less municipal taxes paid 9,000, gross annual value 81,000, gross annual value 81,000, standard deduction at 30% under section 24A. Only the capital gains is not taxable. Okay. Whereas these interest and all is taxable. Here I will not allow that 52,000. I will add back the 52,000. No other adjustment is warranted. There are no additional things. Tell me.
the default base tax, நீங்க 112,500 போட்டீங்க cumulative tax.
Clear? Remove tax payable. Net tax payable. Okay. Actually, the question should give more detail for tax payable because dividend is there, for which tax deducted at source would have been there. Taxation fees and all, they would have deducted 10% if it is exceeding the limit. But with the available data, this should be the balance tax payable. Question number 11. Mr. Ramesh is an authorized wholesale distributor of fertilizer and other agricultural produce. On analysis of trading profit and loss account, the following is revealed. Net profit, following incomes were credited: rent, income tax refund, dividend. Rates and taxes debited to P&L include 1,000 paid as late filing fees under Income Tax Act. Salaries debited to P&L include 35,000 on a single day by way of cash. Interest 120 paid on loan of 10 lakhs from NBFC. Out of the loan amount, 2 lakh was used for personal purpose and balance was used for business purpose. No TDS was deducted while paying interest. Interest of 120 is debited to P&L account. Empty 10,000 paid for building was debited to P&L account. Closing stock was undervalued by 40,000. Income tax refund includes 2,000 as interest. Health insurance 45,000. Advance tax paid. Half of the building is used for business purposes and remaining half is let out to Mr. Anshul for residential purpose. He sold his vacant land for 10 lakh, the stamp duty being 14 lakh. The FMV and stamp duty of the land was on 1st April. The land was acquired by him before that date. He has incurred registration expenses, the cost of inflationary index. Mr. Ramesh turnover for the financial year 22-23 was 3 crores. you are required to compute the total income and the tax payable under the regular provisions of the Act. Read through. We'll compute headwise income, then go for the consolidation. Okay, we'll compute headwise income. Incomes credited but does not pertain to business or profession. Under this law is not allowed as deduction. Okay, now I am reading this line. Interest 120 paid on loan of 10 lakhs taken from NBFC. Out of the loan amount, 2 lakh was used for personal purposes. So interest pertaining to 2 lakhs is directly disallowed. Interest pertaining to 2 lakhs is directly disallowed, and the balance used for it. No TDS was deducted while paying interest. Yeah. Yeah. Only for banks and financial institutions, banks and government, you need not deduct tax at source. Only for banks and governments, you need not. If you are paying interest to any other person other than bank and financial institutions or banks and government, you need to deduct tax. Since it is not deducted, 30% will be disallowed. 30% of what? The business interest. Okay. Interest on loan used for personal purposes. Interest on loan used for 1,20,000 divided by 10 lakhs into 2 lakhs. Are you clear? Are you clear, friends? Okay. Now I want you to understand this. Municipal taxes 10,000 paid for building was debited to P&L account. Please remember, out of the building, 50% is only residential portion. We should not disallow the whole thing, because in the next page they have said half of the building is used for business purposes, remaining half is let out. So 5,000 is allowed and 5,000 only is disallowed. 5,000 is a business expenditure. Okay. Municipal taxes pertaining to I'll come to closing stock adjustment last. Okay, then only closing stock. Okay, and undervaluation of closing stock Stamp value will be treated as full value of consideration. So 3 lakh. You can do it in the main question also, IFOS, not an issue. House property. Business or profession. Capital.
Sir, for TDS deduction, why are we deducting 30 percentage, sir?
TDS disallowance, right? It is not TDS deduction.
Yes, sir.
If any payment to a resident assessee, if tax is not deducted at source under 40A, 30% of such payment is disallowed. Non-resident assessee means 100%.
Okay, sir.
I don't think any other deduction is there. 45,000 paid towards the health insurance of himself, spouse, and his children. Age of the assessee is given as we'll take 25,000 only, though age is not given.
Sir, there is advance tax paid during the year, sir.
I understand there is advance tax. I'll come to that.
Okay, sir. Okay, sir.
LTCG taxable at 20%. Balance income at slab rates. Now, as a note, write that's enough. Note advance tax paid. Advance tax paid 15 lakhs because they have not given TDS at all. Advance tax paid 15 lakhs. Okay. Don't assume advance tax has been debited to P&L and all. No. Okay. Are you clear? Are you clear? Okay. Are you understanding? Okay. Right. Now, two corrections which our friends brought to my notice. One is yes, that Shiv question. For 3 years, he should not own any other property. Shreya is right in that. And second is he said 15%. No, I went and verified. I just in the morning verified. It is 15%. 1 minute. I'll take that question. This is the question. Question number 3. Question number 3. Okay. I've written there is no capital gain. Okay. Question number 3. Since assessee has sold the property, since assessee has purchased another property within 3 years of claiming exemption under 54F, the exemption already granted will be withdrawn. The exemption already granted will be withdrawn. That is this amount. Okay, that's what Shreya was saying. Okay, the exemption already granted is withdrawn. Maharaj, I meant to see that suggested that RTP which you said, that I'll send it to you separately. And then also here in the second question yesterday we worked out. Okay. Okay. This is restricted to 15%. I will write it as a condition itself. Associate where royalty is earned. Okay.
Third question. Any question?
The term for 80 QQB purposes, the maximum qualifying royalty is 15%. The maximum, I am in question number 2. Okay, total royalty earned. Okay. Okay. Deduction under, please listen. Okay. 2,88,000. Okay, I just want you to understand how they have provided that. Okay, they have provided in the, this is the examination MTP answer. Okay, 2,88,000 divided by 15 into 18, 240. restricted to amount brought into India 230 minus the entire 40,000 minus the entire, they are not taking it proportionate. Even though I have earned 288, my deduction is restricted to 288. Okay, 2,88,000 divided by 18 into 15. 2,88,000 divided by 18 into 15, 240. Okay, 240. Okay. Amount brought into India is only 2,30,000 minus expenses. Okay, so 2,30,000 minus 40,000. Okay, 1,90,000 is the deduction which is claimed. Okay, see, this is, suppose if this has come to only 2,20,000, it would have been 2,20,000 minus expenses. Suppose if this has come to only 2,20,000, it would have been 2,20,000 minus expenses. Since it is more, but the money brought into is less, money brought into India will only qualify. Income is right. Income, there is no change. Income received, there is no change. Only for 80QQB, this changes. Am I clear? Okay, right. Friends, I'm not sharing the material right now. I'll share the material after the end of the class. Now, we are answering as it is, my dear friends. We are answering as it is. Okay, I'm going to take up some MCQs and answer. Whatever possible, we will answer now. Whatever possible, we will answer now. Okay, whatever not possible, I'll give it to you so that you can keep answering them. Whatever time available, and this time I'm not going to look into the material. I mean, you are only going to look into the screen and start answering. Later after the class, I'll share you the material. Okay. Though I'm not going to work out question wise or even name the question, but generally MCQ workings. An individual has a loss from house property 250 for the assessment year and income under salary is 14 lakhs. What is his total income if he is paying tax under 115 BAC? 115 BAC, that is, he is opting for the new tax regime where he can claim the entire, okay, assuming this is let out, assuming this is let out, he can claim the entire 250. He can claim the entire 250. So 11,50,000 will be your answer. Okay, just mark 1A because I'll give you the, I'll send you the question later. Okay, 1A. Ram, aged 64 years, has earned interest on fixed deposit 55,000. What is the deduction available if he has exercised the option available under 115 BAC subsection 6, which means he is following the normal tax regime for a senior citizen. Okay, 80 TTB is applicable up to rupees 50,000. Up to rupees 50,000. Random questions, not chapter wise. Okay. Pallavi, engaged in the manufacturing of rubber in India, earns a profit of 12 lakhs. What is her agricultural income component? 65-35. 65% of the profit is agricultural income. An assessee incurred preliminary expenses of 20,000. Started business in May. What is the amount of 35 AD he can claim? 1/5 for 5 years. 1/5 for 5 years. So 4,000 can be claimed. Monica, a foreign national, comes to India every year for 100 days since 2007-8. What would be her RS for 23-24? What would be her RS for 23-24? So what happens is 23-24 is 100 days. Okay. Past 4 years is 400 days. Okay. Past 7 years is 700 days. Okay. So she satisfies the second basic condition, but does not satisfy the second additional condition. So RNOR. Amit has retired from his job. He was entitled to a pension of 12,500. What would be the income under salaries for the assessment year if he has not exercised the option? Okay, in this case also now you can claim, previously they cannot claim standard deduction. Now you can claim. So 12,500 into 12 will make it 150. And 50,000 standard deduction you can claim. It will be 1 lakh. It will be 1 lakh. Interest on company deposit in Canada, 30,000, out of which 1/3 is received in India. Find out the income which is liable to be taxed in India in case of a non-resident. Whatever is received in India is taxable. Mr. Lalu Singh received a hostel allowance of 1,000 per month. For he has 3 children. None of them are studying. The taxable hostel allowance will be 12,000. Actual or 300 per month per child for maximum of 2 children. When the actual is 0, you cannot claim it. Remember, both for hostel and children CEA, if the actual is lesser, you cannot claim it. Share of profit of Mr. A, who is a partner in a company, is exempt from tax. Share of profit is exempt. Only remuneration and interest are taxable. Only remuneration and interest are taxable. Mr. X incurred a loss of 90,000 from owning and maintenance of racehorse and received rent from land 130. His income from other sources 130. Under the old regime, the maximum amount which can be donated in cash for claiming deduction under 80G is 2,000. If it exceeds 2,000, it will not qualify. Moti has won a state government lottery of 1 lakh on 11th October. The state government should deduct tax on such winning at the rate of 30%, that is 30,000, not 3,900, not 31,200. There is no cess and all in this. Directly 30%. Mr. Vijay, being a government employee, has a car, okay, 1700cc, used for official as well as personal purpose. Okay, who has a car? The employee has a car. During the year, he incurred 40,000 on maintenance and 20,000 on driver salary. The entire amount is reimbursed by the employer. Find out the taxable perquisite. Find out the taxable perquisite. Okay, 40,000 minus 1,800 into 12. Similarly, 20,000 minus 900 into 12. 40,000. Okay, the car is owned by the employee. Expenses are reimbursed by the employer. Car is used official as well as personal purposes. May I know the answer? 2,000. Second, B, option B. Option B. Brought forward loss from house property 310 is allowed to set off against income from house property 5 lakhs to the extent of, okay, the entire 3,10,000. If the assessee, yeah, brought forward loss from house property 310 of assessment year 23-24 is allowed to be set off against income from house property. The entire amount can be set off. Or a person of Indian origin visited India on 3rd October 23 and plans to stay for 185 days during the 4 years. Or a person of Indian origin visiting India for 185 days. During the past 4 years, he was in India for 750 days. Earlier to that, he was never in India. His total income other than foreign income during the year exceeds 15 lakhs. Okay. Remember, he is a person of Indian origin. He is a person of Indian origin. So the second basic condition will become, and his Indian income exceeds 15 lakhs. So the second basic condition will become 120 plus 365. And he has satisfied that. He has satisfied that. Okay. So he will be, but for all practical purposes, it will be taxable as RNOR. He will be taxable at RNOR. Okay. If the wordings are an Indian citizen, okay, and if he is not taxable to any other domain only, this deemed resident will come. Otherwise, RNOR. But for computing the income, both will come under the same style of RNOR. Max.
Yes, he was there for more than 730.
He was there for 7 years, sir. 7 years, you are.
Yeah.
He was during the past 4 years. Okay. So, but we don't know the other condition.
We can assume this.
No, why do you want to assume?
No, sir, it will be RNOR.
No, you need not. He is a person of Indian origin visiting India. So the question's intention is not, and why did they give income is to make you understand that he will become an RNOR because of these reasons. Maximum deduction under section 80 GG will be limited to 5,000 per month. 5,000 per month. When assessment has not been completed, revised return can be filed within dash from the end of the relevant previous year. 9 months, my dear friends. 9 months before 31st December. Before 31st December, they can file. The rate of TDS in case of listed debentures is 10%. That is interest. Friends, some case law related and also little, we'll read it twice, thrice, etc. Mr. Raja, an Indian citizen, a senior citizen, has set up his business in Canada and is residing in Canada since 2009. He owns a house property, half of which is used for his residence, half of which is rented out for 12 lakhs. He purchased an apartment in Delhi. He had taken a loan from Canara Bank in India for 34 lakhs for the purchase of this property. The interest for this year is 314 and principal was 80. Mr. Raja has given this property on a monthly rent of 32,500 since April 23. The annual value, annual property tax is 40,000, which is paid by Raja whenever he comes to India to meet his parents. Raja has visited India for 124 days during the previous year. Before that, his total visit for the past 4 years comes to 366 days. He had a house in Ranchi, which he was sold in May 21. In respect of this house, he received an arrears of rent during the current year, which was not taxed earlier. Mr. Raja sold 10,000 listed shares at 480 per share on 59 when he acquired, that is when he acquired before 31/118 for 100, STT was paid. On 31/118, the rates were given. I will take the highest rate. Mr. Raja wants to pay tax under the default tax regime. Based upon the fact, choose the most appropriate answer. Okay, so let us quickly compute his income from house property first. Okay, Mr. Raja and Indian area, he has set up a, okay, first is residential status. Okay, first is residential status. Okay, stay in India during 23-24, 124 days. Past 4 years, 366 days. Okay, first, if his Indian income exceeds 15 lakhs, then he might become a RNOR. Otherwise, he will be a non-resident. So I'm going to compute the income in India. Let me leave alone the Canada property for some time. That is anyhow not taxable, even because his RNOR will only be, okay. He purchased an apartment in Delhi. He has taken a loan from Canara Bank, 34 lakh. The interest of such loan, 314, principal, 80,000. Okay, rent 32,500. Okay, rent 32,500 into 12. Okay, MT is 40,000. So 350. I'll take 30% standard deduction, and I have an interest of 3,14,000. So there is a loss which is arising on the house property, 69,000. Arrears of rent now received. Arrears of rent now received is 2,96,000. 2,96,000 into 70% becomes taxable. 2,96,000 into 70%. So his income from house property will be 138,200. 138,200 is income from house property. Okay, shares. Okay, sale value will be, Here 10,000 shares at 480. Okay, purchase value will be, okay, 10,000 shares, 10,000 shares at 300. 18 lakhs. Okay, so his Indian income exceeds 15 lakhs. So the provisions of RNOR will be applicable to him. The provisions of RNOR, this is question number 19.1. 19.1. What would be the amount of income taxable under house property for Raja? 138,200. 138,200. What would be the amount of capital gains that arise in Raja? 18 lakhs. Mr. Anai, aged 52 years, is a CEO of a company. During the previous year, he earned a salary of 1 crore 65 lakhs, LTCG on sale of listed shares 106,500, interest 482,778 on savings bank account. Further, he has provided the following information for filing his return. He does not receive HRA. He took a loan from SBI for repairing his self-occupied house and paid interest of 80,000 and principal 150. Mr. Anai has made the following payments towards medical insurance for health policies taken for his family members. For his brother, will not qualify. For his parents, qualify. For himself and his spouse, qualify. Preventive health checkup, qualify up to 5,000. He deposited 1 lakh in PPF 80C. 50,000 and 250 in Tier 1, Tier 2, he can claim. 50 and 50 he can claim. He has paid 530 as advance tax, and employer has deducted TDS of 5181. He is of the opinion that the balance amount of tax he will pay before the due date. Mr. Anai shift out of the default taxation. Based upon the case laws given above, choose the most appropriate answer. What would be the deduction available under Chapter 6A? Under Chapter 6A, let us understand this. Anyhow, 150 is covered. Okay, so 80C Part 1, 1,50,000. Part 2, another 50,000. Another 50,000. Mr. Anai made the following payments towards medical. Brother will not qualify. Parents, 80D parents, 17,670. 17,670. 80D, this 21,000, another 4,000. Totally 25,000 only can be claimed. 21 plus 5, 26, but okay. 80D own 25,000. 25,000. Okay, this PPF does not matter at all because it is already covered. Okay, now there is a savings bank interest. He earned, okay, savings bank interest, and he is 52 years. 80 TTA 10,000. 252,670. This is the breakup. Are you clear? Assume for the purpose of answering this question alone that Mr. Anay pays 65,000 rent per month for his rented house at Mumbai to Mr. C, a resident individual. Is Mr. Anay liable to deduct tax at source? Yes. 194 IB says if the rent exceeds 50,000 for a non-business assessee. For a non-business assessee, if the rent exceeds 50,000, tax is liable to be deducted at source. TDS will be 5% of the rent, which is only in the month of March. Only in the month of March. Yes, Mr. Anay is liable to deduct 5%. 65,000 into 12 into 5%, please. 65,000 into 12 into 5%, please. What would be the amount of interest chargeable on account of short payment of advance tax? He has paid 530 as advance tax. His employer has deducted tax at source 5189. So there is a working which we need to make. Okay, quickly. Salary. One crore 65 lakh. Okay. LTCG on HHTTP. Because it's a HP loss is minus 30,000 because the loan is taken for repairing. The loan is taken for repairing. So minus 30,000. Okay. Chapter 6A. This will be his total income. This will be his total income. Are you following? This will be his total income. Friends, LTCG at 10% above 1 lakh. So what happens is,
Sir, ATC is restricted only to 1,50,000, no, sir.
ATC, the ATC is 150 only I am giving. I am saying chapter 6A. This is not ATC. It consists of ATC, ATD, ATTTA.
Sir, part 2 is from ATC, no, sir.
Part ATC is divided into 3 parts. Part 1 is restricted to 150. Part 2 you can claim additional contribution to national pension scheme can be another 50,000.
Okay, sir.
This into 10%. Balance this minus this. He is following old tax regime. So minus, we need to add 2 rupees. minus 10 lakhs into 30% plus 1,12,500. Okay, 15% surcharge, 4% HEC. This is the amount of tax. Okay, this is tax. TDS in the given question says 51,89,000. 51,89,000. So tax due comes to, okay, advance tax comes to 5,30,000. Okay, balance tax payable is this much. Are you so far understanding? Okay, now with regard to 234B, first I have to check whether 90% is paid. Okay, checking whether 90% of tax due is paid as advance tax. Yes, paid. Hence 234B is nil. Am I clear to you all? So third part nil. Third part nil. For some time I'll switch it on. On 2010-23, Priya, minor child, gets a gift of 20 lakhs from her father's friend. On the same day, the amount is deposited as fixed deposit in Priya's bank account. On the said deposit, interest was earned, in whose hand the income of Priya shall be taxable. Also, compute the amount of income that shall be taxable if both the parents pay tax under default tax regime. It will be taxable in the hands of either father or mother, whosoever income is higher. Remember, both are income. This is also income. This is also income. If you are following the normal tax regime, you will get 1,500 as deduction. If you are following the default tax regime, that 1,500 will not be there. Income is 20,11,500 shall be taxable in the hands of father, mother. Income of 20 lakh 11,500 shall be taxable in the hands of father or mother, whosoever income is higher. Income of 2013 is taxable in the hands of father or other, whosoever income is higher. Also compute the amount that shall be, both the parents follow tax under default tax regime, D. Rohit, a resident Indian, has incurred 15,000 for medical treatment of his dependent brother, who is a person with severe disability, and deposited 20,000 with LIC. 80 DD, if he is following the if he is following the normal tax regime, will be severe disability 1,25,000. 1,25,000. Okay, 80 DD. Mr. Kamal, aged 45 years, commenced the operation of the business of 3-star hotel. My dear friends, this is a 35 AD business. He incurred capital expenditure on land exclusively and capitalized the same. During the year, he incurred capital expenditure 2 crores, 50 is for land, 1.5 is for building. The payment in respect are made through approved modes. The profit for the year for running this hotel is 85 lakhs. He has employed 220 new employees during the year. 40 on 1st June, yes, qualifies. 80 on 1st July, yes, qualifies. 50 casual will not qualify. 30 on 1st September will not qualify. 20 on 1st December will not qualify. All regular employees participate in RPF and their emoluments are paid by approved mode. His gross revenue from hotel business is 11 crores. Mr. Kamal has opted out of the default tax regime. Mr. Kamal is also running another hotel in Ahmedabad, which commenced its operation 20 years back, the profit for which are based upon the fact. Choose the appropriate answer. Assuming that Mr. Kamar has fulfilled all the conditions specified for 35 AD and has not claimed Chapter 6A, what would be the quantum of 35 AD which he is eligible to claim? We already know, okay, that out of 2 crore, this 50 lakhs he cannot claim, it's for land. This 50 lakhs is for land. Only 1.5 lakhs, 1.5 crores can be claimed. So, D. D. What would be the income chargeable under the head PGBP for assessment year 24-25? I'll read the bottom part of it. All regular employee, okay. His gross revenue from here it is said the payments in respect of the were made. The profit from the business of running this hotel is 85 lakhs. Okay, okay. Before claiming 35 AD. So, 85 lakhs minus 1.50 crores. 85 lakhs minus 1.50 crores. Give me a 65 lakhs 35 AD. Okay, his gross revenue from running a hotel is 11 crore. Mr. Kamal has opted out. Mr. Kamal has another business of 4-star hotel in Ahmedabad, which was commenced 20 years back. You can set off this loss against that hotel. Why? That qualifies under 35 AD because it is a 4-star hotel and it was commenced 20 years back. It is very much as the same business. So you can adjust this 140 minus 0.6 or 65. Okay, 140 minus 65. Answer will be 75 lakhs. 75 lakhs. Would Mr. Kamal be eligible for 80 JJAA? If so, what is the quantum? Let us find out. Okay. Look at this. 40 employees at the remuneration of 24,000 into 10 months. April, May, they cannot. From 1st July, from 1st June to this one. 96 lakhs. 80 employees into 24,500 into 9 months. $81,72,000. Plus, please remember, our gross total, our deduction cannot exceed our gross total income. We just now found out the gross total income to be 75 lakhs. So Even though he is eligible for 8172, he can only claim 75 lakhs. That's a very small nuance there. Are you following? Are you all following? Okay. Mr. Aravind, an Indian citizen, wants to file his return of income. He required assistance for which he approached you, Ayopavam. He shared the following details. Mr. Aravind owned a house property in Bangalore and the same was rented out at 65,000 to Arjun, a salaried employee. So remember, Arjun should deduct TDS for Mr. Arjun, Mr. Aravind. Arjun should deduct because 65,000 per month. Okay, just to keep while reading itself, we'll process some data. He claims that he was the only income which he earned during the previous year. However, when you had sought for his bank statement, you observed the following. Income tax refund, which includes interest. Bank statement showed a credit of 55,000, which he claimed to have received as a gift from his grandchildren on his 60th birthday. On grandchildren means within the lineal descendant, so not taxable. On further assessment, you are able to understand Mr. Aravind and his wife have traveled to Mauritius to spend some time with their son who is staying there. On scrutiny of their passport and relevant document, you conclude that they left India on 27th September and returned back on 31st March. During the 4 preceding years, both had stayed in India for 320 days. Prior to that, they had been staying only in India. Based on the case scenario given above, compute the answer. What is their residential status? They left on 27th September. April, May, June, July, August, September and March 1 day. 180 days. Don't satisfy the first condition. Second basic condition also not satisfied. 60 plus 365. 60 plus 365 is not satisfied. Please understand, during the previous year, they were not here. Okay. They were not here for 182 days or more. And the second basic condition of 60 is there, but not 365. Both that's okay. So they become non-resident. So they become non-resident. Is there any requirement to deduct tax at source on such rent by Mr. Arjun? If so, what is the amount? Same, no? 65, what is the rent? 65,000 into 12 into 5%. 39,000. B. Which of the following statement is correct with respect to advance tax liability of Mr. Aravind? Advance tax liability shall not arise since he is a non-resident. Wrong. Advance tax liability shall not arise since Mr. Aravind is a resident senior citizen. Wrong. Advance tax liability shall arise since he is a non-resident. Advance tax liability shall arise since his tax liability is not less than 10,000. D is the correct answer. அங்க உனக்கு அங்க முடிச்சிட்டு நீ பிரேக்ஃபாஸ்ட் சாப்பிட்டா போதும். அங்கே போன Roshini Limited has 2 units. One unit is a SEZ and another unit is DTA. Remember, no more exemption for DTA, only for SEZ. DTA is not eligible for exemption. The unit in a DTA SEZ was set up and started manufacturing in 2014-15. 14-15, 15-16, 16-17, 17-18. 18, 19, 19, 20, 20, 21, 21, 22, 23, 24. We are still there. Okay. The total turnover of DTA of a unit in DTA is 1250 and 450 respectively. Exports export sales of unit of SEZ and DTA is 3.5 and 2.25. Net profit is 95 and 80. Out of the export sales of 350, 2 lakh has been received in convertible foreign exchange. What is the eligibility? I believe this is for SEZ. This is for SEZ. Okay, friends. This should be 1250. So, 2 crore, out of the export sales, 2 crores is received. Profit is 95 lakhs into 2 by 12.5 into 50%. 95 lakhs total turnover and DTA, sorry, SEZ turnover will be 1250 minus 450. 1250 minus 450. It will not be 1250. 1250 minus 450, which will be 7 lakhs. Huh? No, 8 lakhs, 8 crores. Okay, please, 95 into 2 by 8 into 50%. 1187,500. 1187,500. The total turnover and unit. So I read it wrongly. An interesting question which I want you all to understand. What would be the tax liability of Savita, a resident who attained the age of 60 years on 1/4 on the total income of 7,25,000, comprising of salary and interest under default tax regime? Under default tax regime. Under default tax regime, there is no senior citizen or a super senior citizen. Okay. 7,25,000. First 3 lakhs is nil. Next 3 lakhs is 15,000. Next 1,25,000 into 10%, 12,500. 12,500. So how much are we getting? 27,500. Okay, 27,500. I'm working in this out. Okay, opportunity to tell you this. Up to 7 lakh, there is a rebate. Up to 7 lakh, there is a rebate. Here, the income is 7,25,000. So, the excess is 25,000. Excess is 25,000. Are you understanding? Okay. For 7,25,000, you all told me the tax to be 27,500. For 7,25,000, the tax is 27,500. So, had I just earned 7 lakhs, I would not have paid any tax. Had I just earned 7 lakhs, I would not have paid any tax. By earning 7,25,000, I am paying 27,500 as tax. I am paying 27,500 as tax. So 2,500 rupees I will get rebate. 2,500 rupees marginal rebate I will get 2,500. Okay, 25,000 plus 26,000. B is the answer. We'll stop with 30 questions. Okay, the last 10 you can answer yourself. Okay, there will be totally 40. I'll send you them. Mr. Pankaj, an Indian resident, purchased a residential house at Kanpur before 1/4/2001. Stamp value is 25 lakhs. Mr. Pankaj entered into an agreement with Mr. Gyan for the sale of such property 61 lakh and received 2.5 as advance. However, Mr. Gyan did not pay the balance. Mr. Pankaj forfeited the advance. That will be treated as income. That will be treated only if it is forfeited before 2014. You need to adjust. Otherwise, it will be treated as income. On 10/5, Mr. Pankaj sold the property for 1.5 when the stamp value was 2 crores. So obviously 2 crores. He purchased 2 residential properties in Delhi and Mumbai, 57 lakh each. No other income he has. On 31/12, Mr. Pankaj decided to sell the house property at Mumbai to his brother, from whom 25,000 was received as cash as advance for signing the agreement. Sale deed was registered in 25. On receipt of the balance by account payee check, the stamp duty on that date was 60 on these days 61 and 64. Based on the case laws above, choose the most appropriate answer. What shall be the indexed cost of acquisition of residential property at Kanpur for computation of capital gains? My dear friends, 25 lakhs into 348 by 100. 87 lakh. Okay, B. The amount of capital gains taxable under 24/25 in the hands of her. Okay, so 2 crores minus 87 lakhs minus 57 into 2, 1 crore 4 lakhs. 1 crore 14 lakhs. Repeating, 2 crore sale value, stamp value, which is higher, 2 crores minus 87 lakhs minus 114. How much it comes to? Or it's fully covered. Okay, nil. So 2 crores minus 87 comes to 113. Yeah, you cannot claim loss, so nil. The amount of capital gains taxable under 25/26 in the hands of Pankaj for sale of residential house property in house property at Mumbai. Okay, so we will only take 58 and 64 only. I will compare 58 because he has received it in cash. 58 and 64 I will compare. 64 is higher. 64 is higher. Stamp value 58 on 25,000 received in cash. So date of registration is only relevant. For date of registration, stamp value is 64. 64 minus 57. 64 minus 57, my dear friends. 64 minus 57. Actually, it should be plus 56.5 because the old property is also now sold. But the question is for the sale of residential property at Mumbai. So, okay. The amount payable as tax under 56,210 in the hands of Gaurav. That is, Gaurav, okay, purchases a property worth 64 lakhs for 58 lakhs. Gaurav is the person, his brother, okay, Mr. sells his property to his brother, not nil, relative. Otherwise, 6 lakhs would have come. Now, since he is a relative, there is no gift provision. Now, since he is a relative, there is no gift provision. What shall be the tax credit available with Mr. Pankaj with regard to sale of property at Kanpur, assuming the tax was fully deducted by Mr. Rohan? Mr. Rohan would have deducted 2 crores into 1%. 50 lakhs, it exceeds 50 lakhs. So 2 crores into 1%. How much it comes to? 2 lakh. That is the tax credit available, because we all know LTCG is nil. Okay, because you gave the full amount. So there's 2 lakhs is available with him. Is Mr. Pankaj required to file the return? Yes. Even if you are claiming any exemption under 54, even if your total income is not there, okay, yes, since tax, no, since the total income before exemption exceeds this exemption. Are you all following? Understanding? Okay. Mrs. Deepika, wife of Mr. Santosh, started a business of trading in beauty products. She invested 5 lakhs on 15/7. Out of that, gift received from her husband, Mr. Santosh, she invested 4 lakhs from her own savings on the same day. She earned a profit of 9 lakhs, divided in the ratio of 5:4. Okay, share of profit is includable. Share of profit 5 lakh is includable, and share of profit of 4 lakhs is receivable. May I know the 9, 5/4? Yeah, 5. Mr. X, 47 years, has salary income 725 and agricultural income 1 lakh. Compute his tax liability if he is paying tax under default tax regime. Okay. I'm doing step 1. Okay. 725 plus 1 lakh. 8,25,000. So it will be nil plus 15,000 for the first, then 2,25,000 into 10%. Okay. Step 2. Okay. Basic exemption limit plus agricultural income is 1 lakh. 4 lakhs. On that, 1 lakh into 5%. 37,500 minus 5,000, 32,500. 32,500. Look for this. The same 2,500 will be the exemption. That rebate. 2,500 will be the rebate. Okay. Minus 2,500 will make it 30,000. $31,200. I think they have put directly here. But they have put 33,800, but I think I'll check and send you a voice note if possible. I am not sure whether rebate they are excluding agriculture income, because his total income is only 725. Obviously, he is eligible for rebate. Just because they are adding agriculture income, is the rebate eligibility not there? I'll check and tell you. Okay. 30th question. Rudra is engaged in the business of trading. His turnover was 6 crores. His minor daughter's marriage is fixed in December. He planned a destination wedding in Goa for his minor daughter. For the wedding, he withdrew 40 lakhs in cash in the month of September and 65 lakhs in the month of October from a bank. So total comes to 105. Okay, that 5 crores into 2%, 5 lakhs into 2%, bank would have deducted. He booked 30 rooms for 5 days for the accommodation of his relative and paid 40,000 in cash as advance and balance by account payee check. He took the catering services of Tasty Caterers, a sole proprietor, for the wedding, for which he paid 1020 on 15/10. For her wedding, he gifted his daughter a house property, okay, from SK Builders by paying account pay check 15 lakhs. The stamp value on that date 16 lakhs, and on the date of transfer to minor daughter is 20 lakhs. Rudra paid 45,000 in cash and balance in check to travel agent for the return ticket of some of his relatives to US. He regularly files his income. Based on the above, compute the amount of tax to be deducted by the bank. How much is that? 5 lakh into 2%, 10,000. The amount of tax to be deducted by on payment made to Tasty Caterers is the total exceeding 50 lakhs. For non-business payment, 194M is applicable. 194M is applicable only if the total exceeds 50 lakhs. Here the paper total is not exceeding 50 lakhs, so nil. What will be the amount taxable and whose hands in respect of purchase of immovable property by Rudra from SK Builders and gift of the same to his daughter? Only in the hands of Rudra. Gift is not taxable. Okay. So what is the purchase? For her wedding, he gifted his daughter a house property, paying account check of 15 lakhs. The stamp duty value was 16 lakhs. So the inadequate consideration exceeds 50,000. Whole of the inadequate consideration is taxable in the hands of Rudra, not his daughter. 1 lakh in the hands of Rudra and 20 lakhs in the hands of daughter. Wrong. 1 lakh in the hands of Rudra and nothing in the hands of minor daughter. Am I clear? Okay. The last 10 questions, I leave it to you. Okay, same style only, but please answer it. If you have a doubt, you can voice note me or you can send me. Okay, whatever other doubts also you have, please send it to me. But have patience, a lot of patience. You need to keep reminding because I'm slightly busy with the drama season that is coming up. But you can definitely take all the liberty to text me immediately. Keep texting me saying you have not yet clarified the doubt. Appadinu ana the final rendu word which you will scold me adu matram text pannadinga. Okay, so otherwise you can definitely see. I always believe on something that indirect tax is easier than direct tax. Direct tax is interesting than indirect tax. Okay, right? And because of our classroom experience, last 2 batches, I'm not even joking, last 2 batches, our students were able to score more in direct tax than in you might ask me, how do you know the split off of mark? I don't know, but they have voluntarily told me that their direct tax performance was much higher, not even equal or a little higher, much higher than IDT. So sometimes in 1 or 2 adjustments, if you are unable to understand, don't get jittery. Remember, it is just 2 adjustments out of the 8 adjustments. The remaining 6 out of 8 you will be. Please feel confident. Okay, it will not challenge you. Only your fear might make you to perform little. I am very happy you have all prepared well. Okay, you have all prepared well. That part of it, at least the people who are sitting here in the classroom and online, you have all prepared well. What you need to do is go and execute it. Okay, don't even fear. Direct tax will not be challenging to you. Okay, if the paper is tough and if you have performed moderate, you are winning. Then if the paper is easy, you have performed very well. A easy paper, everybody performs well. If with a difficult paper, a moderate performer wins. Okay, and you cannot judge your performance in DT. It is not a balance sheet to tally. Okay, you cannot judge your performance. Leave it to, as usual, God. He will take care of you. Okay, for all the sincerities and commitments, it will be a cakewalk only, and do not worry about it. Okay, and the next session of DT will be in final. Okay, by God's grace, hopefully the same batch comes in the same style and same energy. Okay, otherwise it was, again, I would say that it was wonderful. I never thought that it will be a non-tired revision session, and that credit goes to you than to me. Okay, just keep preparing. Don't get jittery. The day you are losing confidence, you have to just call me and speak to me. Okay, and I'll tell you that I have gone through whatever you are going through. I am not Dinesh Jain to be that creamy layer student. Okay. Say ala creamy layer la. Okay. Okay. So I am just a normal student who believe that only luck and God helped me. Okay, to clear. So have that faith, have that enormous thing. Whatever we have worked in the revision class will be sufficient for that 1.5 days. The total hours we have used is some 15 hours. So in that 30 hours you are anyhow going to spend 15 hours, means this is more than sufficient. And everywhere the provisions that are being spoken will be somewhere staying in your mind so that you can recollect. Okay, right? Meet you all in the temple in another half an hour, maximum half an hour, 9:15. I have promised them that I'll come. Otherwise, superb session, and I want to tell you all, especially my dear friends, that this is the same date last year we went to temple. Yesterday, okay. This is almost the same date, so we are repeating it so that we are again successful. Okay, meet you all in the temple. Thank you very much for a wonderful session. Okay, keep in touch. Never go out of touch and all. Okay, and keep coming for dramas after your examinations. Okay, right? All the best, friends. Online friends, thank you very much, Tamil Selvi. And
Thank you,
all
sir.
these people who have been very, very regular. I know Bhavishya, Tamil Selvi, Padma Shri, Krishna Priya. Thank you very much. I will again meet you very often. Monisha, I know how much you have been following up for answers and all the other things. Thank you very much, Aditya, and all people over here. It was a wonderful session. We will meet again in final for officially in the classroom. All the best.
Thank
Thank
you,
you, sir.
sir.
Thank you, sir.
Thank you, sir.
Yeah, yeah. Somebody's asking me something.
Thank you.
Yes, Sultan.
Is 10% so actually but 15 lakhs plus 10% is 16 lakhs.
So you will say nothing is taxed, but that option is not there. Oh, okay. Yeah, 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 yeah. Because yeah, you are right. It has not exceeded 110%. Yeah, yeah, yeah. He's right. He is right. Because it has not exceeded 10%. All the best, friends.